Meghan, this is yet another data point. Is it enough, though, for the Fed to act by that market-predicting September timeframe?
Yeah, Dominic, thank you for having me. I do think it is. What we've gotten this week has definitely been a threading of the needle that we've been looking for, that Goldilocks scenario where you have growth coming in still solid, GDP surprise to the upside, and some of that was swinging around of inventories, but underlying that data was really solid consumer spending as well as CapEx. And then on the inflation front, we are getting continued disinflation, housing, that lag that we expected to kick in is finally starting to show itself in the data. I think that definitely opens the door for Chair Powell to very clearly telegraph an upcoming rate cut when he speaks in July, but that rate cut to first occur in September. Most likely they probably could and maybe even should cut in July, but I think there's not a big difference between July and September, and we think the first cut will happen in September. And then more importantly, we think the Fed will be in a position to cut by 25 basis points at almost every meeting thereafter, looking out about a year from now. So that sets up very favorably for the soft landing and for stocks to continue the bull market.
You know what it does set up for as well, Meghan? This idea that we're seeing some of the muscle memory perhaps rightfully playing certain parts of the market. I wonder if you've watched the price action that we've seen over the last week, and specifically between the first part of this week and the last 2 days, it has been a resurgence in mega cap technology, media, and telecom stocks, despite the fact that we've been talking so much about this broadening of the rally, small and mid cap stocks and the value parts of the market. Do you think the overweights should happen from here on out still in technology and comm services?
Well, we are being very careful to spread our bets out. That's not maybe the most exciting answer, but I think in this type of a market, diversification is really critical because what we've seen early on in the past, and I say early on, it's really just been a couple weeks of this rotation, but it was really a flow of funds out of the high momentum stocks into the laggards, namely small cap and some of the cyclicals. So that was kind of more of almost a bearish rotation, but it doesn't have to play out that way. Today, we're really seeing a rising tide lifting all boats with nice participation from mega cap tech as well as small cap. So we actually have an evenly placed overweight on U.S. large cap and U.S. small cap. So we're going to pick up some of that momentum and mega cap tech trade, but also hopefully benefit from some of the broadening. And I think that that can occur with both being winners, maybe not on the same day, but if you look out over 9 to 12 months, we think large cap and small cap will both do well. Small cap should continue to close the valuation gap between large cap. I don't think it gets all the way back to par relative to history. I think there's some real structural advantages happening in large cap today over small cap, but the rate cut story is definitely benefiting those smaller companies that carry more leverage. I think what's really unique is that we don't have too many data points where the Fed cuts as we expect into a soft landing. Typically, a rate cut cycle benefits small cap, but that's also wrapped up in a recession story and a bouncing off the bottom. So this is a little bit of a different scenario, and I think that's why diversification is really key.
Amen to all of that, Meghan. And I just wanted to pick up on what you said there, because as more and more people are talking favorably about small caps, I feel like I'm picking up a bit more caution in your comments, which is underpinned by earnings growth. When you have 84% earnings growth with the Fab 5 and 5% for the rest of the market in Q1, you can understand why they've been outperforming. So just if you would expand a little bit more on that, I'm curious.
Yeah, we do expect the rest of the market to pick up some of the slack when it comes to earnings growth. And you're probably going to see mega cap tech continue to deliver the best earnings growth, but at a slower pace. The rest of the market should deliver earnings growth at a better pace than they have been. But Kelly, you're absolutely right. When we look at small cap, we cannot ignore the fact that about half of the Russell 2000 earns no profits. And we are talking about the Fed cutting rates because of a softening economy. So within small cap, we are still tilted and biased towards higher quality stocks. That tends to play out a little bit better when you lean on active management in the small cap space. And that's not necessarily what we've seen on some of these really big days for small cap, you tend to see a little bit of a junkier rally. But again, over a 9 to 12 month investment horizon, we want to be in the higher quality companies that have a little bit lower leverage and really good profits.